So my name is Colton Jerish. I am the creator and founding partner of Flywheel Capital Management. We give access to LPs, access to private markets more than anything. Myself, a gentleman named Rick Dude is dialing in right now, founded Flywheel, and then we brought Mark Peck as well, who is senior director at Forge Global. Forge gives access to private markets as well. They're one of are you the largest platform for trading in private securities to date, or how does that look, Mark?
Well, for the sake of our regulatory fairness and framework, we'll say we're one of the largest, certainly in the United States and across the globe. We've been able to take advantage of the tremendous growth in the private markets and are happy to be here participating with the audience here today around alternatives, particularly digital assets, and how it relates to getting success out of teams like Flywheel.
Got it. Thanks, Mark. Yeah, I'll go ahead and run through some of the regulatory slides and then give an overview of the presentation while Rick is joining as well. As we get going, if you have any questions, feel free to post them either in the Q&A or in the chat box. We can address as we go, and then we will open it up to a few questions at the end as well. Sound good? So yeah, just for disclosures and disclaimers, this isn't an offer or sale of any security device. We do not see these as forward-looking statements. I would definitely look through these slides at the end of the presentation if you have more interest. And what we're going to be talking about today is we're comparing the rush to artificial intelligence, blockchain, and cryptocurrencies. It's similar to the gold rushes of yesteryear. You can see on the screen that almost to the date, 125 years ago, Klondike gold rush really began. Settlers or people from all over the nation were rushing towards the Canadian, the Yukon fields. And yes, there was this rush for gold, but also people were able to exploit that rush through investing in the picks and shovels. You can see on the screen, ads for Alaskan footwear. You're going to need a pair of these. Arms for the Klondike, and transportation to get from, say, the East Coast over to the Klondike gold fields. So looks like Rick was able to join as well. Rick, are you here?
Yeah, I'm here. Sorry about that. Had a little bit of technical issue.
Great.
Modern COVID times. Yeah, so as Colton is pointing out, Klondike Gold Rush made a few people a lot of money, but a lot of people no money. But who consistently made money were those who were supplying the picks, shovels, footwear, transportation, basically everything necessary in order to exploit the opportunity. So we feel that we're seeing something similar today, particularly in the crypto and blockchain markets. There's a lot of speculation about where crypto and blockchain are going, as well as AI. There's a lot of uncertainty about which industries will benefit, which industries will attempt to benefit, but ultimately, not find gold. But what we know for sure, and what we're seeing in this macro trend, is that there are players in the space that are supplying the tools in order to exploit the technology that are making money hand over fist. And so we put together this presentation to talk about some of those players, who they are, and an innovative way in order to get exposure to the ABC technology that is really in vogue right now. So everybody on here probably knows that crypto in the last, especially 12 months, has really gone mainstream. It's gone from a topic that, was kind of discussed at the fringes, a lot of education discussions, not a lot of discussion around serious disruption. And now it's hit the center stage. Government has been forced to talk about regulation. There's even, talk about doing things such as GovCoin, which would put the government right in the middle, not only of regulating crypto, but actually participating in its adoption. similar with blockchain and AI. We're finding that these things have gone mainstream, and so it's a trend that can't be ignored. Next slide.
Rick, we have a question as well from Gerard Watson. Thanks, Gerard. So blockchain 2.0 has arrived, where many are putting AI, big data, and predictive analytics to the sophisticated accounting protocol of blockchain. This new blockchain intelligence might be much harder to assess. What are your thoughts around that?
Yeah, so my immediate, and Gerard is really smart question. My immediate thought is that anytime you're talking about something that is R&D related to novel technology set for disruption, this is a prime pick and shovel play. I think and I'm a data guy by trade, the first thing that you need when you're doing big data research is you need a place to store that. And so some of the largest beneficiaries of what's been happening with particularly AI research has been the big data providers. And so think about Snowflake, think about Hadoop, think about some of the various IBM technologies and whatnot. And then there's a lot of smaller players that are kind of up and coming that are right in the middle of that big data. And so my thought is that when you're looking at R&D innovation that could disrupt an industry, think about the tools that those that are doing the research must buy, and then target your attention to those tools.
Yeah, and that lends itself to our next point here as well. A lot of the companies investing in these technologies, especially like AI, blockchain, they're a lot of different public companies or larger players are investing in them, but you really don't get that exposure. Rick, can you talk to that a little bit? Yeah,
absolutely. So I mentioned in my answer earlier about IBM, and I was an IBMer for a long time, and I love what IBM does. The problem with a place like IBM is it's so big that if you want to get exposure to a particular targeted macro trend, targeting a company like IBM will just not get the job done. And so, and then the next slide, if we can go into the next slide, kind of gives the example of Tesla. We all know who Tesla is and what they do, electronic car manufacturing and battery innovation. Tesla made two stances in crypto. One was to accept Bitcoin, which they then later rescinded. The second was to actually buy Bitcoins. However, while the purchase was significant, 1.5 billion of crypto, when you compare that to their market cap of 620 billion, that was less than 0.5% of exposure to the crypto market. So the question you have to ask yourselves is, if you want to follow the crypto macro trend and you see a company like Tesla make a move, is investing in that company the right way to do it? And our answer is no. However, we feel like there is a right way to do that, and that's with smaller private companies, which we'll talk about. Let's go to the next slide. So here's just some examples of targeted private companies that we've identified are providing the picks and shovels of ABC. I won't go into what all of them do, but we'll talk about 2 or 3 of them. Kraken. Most people, I think, at this point know who Kraken is. Colt and I are in Austin, Texas. Kraken's right here in town. Kraken is really right at the heels of Coinbase as far as a market leader of market making of crypto. They've accepted a number of different altcoins. They've dabbled in securitized lending related to crypto, and they've got a number of blockchain innovations. They eat, breathe, sleep crypto and blockchain, and they're private, and they're small, and they're focused. Data is another great example. Data has nothing to do with crypto, but data does have a lot to do with big data. When you do research with AI and you do blockchain innovation, oftentimes big data is a big part of that. And so companies like Data are set to benefit. In a lot of ways, Data has similar offering to some other public companies. Going back to the IBM example, IBM has a number of big data tools, but they do a lot of other stuff too. And so an investment in Data can put you right in the forefront of what's happening with AI research. Keep Trucking is probably one of my favorite examples because this is it's a little bit of a pick and shovel play in that they are AI research related, but they're industry focused. So Keep Trucking offers tools related to improving and making more efficient logistics, tractor trailer transportation. Keep Trucking is doing AI research related to fuel efficiency, driver error. I really love this play because it's a big industry that you've kind of got, and an alongside AI play that could really disrupt things. And so these are the kinds of companies that we want, where crypto, blockchain, AI, it's in the center of their strategy, and they're still small and nimble enough that they can really attack this industry without getting distracted by many, many lines of businesses like some of the larger public companies are. Let's keep going. So let's talk a little bit about our exposure. Are we true to this? The answer is yes. 50% of the companies Flywheel has invested in have ABC exposure, just like the 6 that you saw on the last slide. Average enterprise value of our typical investments, 12 billion. Compare that to the enterprise value of, like a Tesla at 600 billion. It's a small, focused investment with a smaller cross section and a lot of room to run. These are all things that we like a lot. Let's keep going. So now we're going to, go ahead.
I was just going to say, how do we access these companies? And that's where we work pretty closely with Mark and his team over at Forge Global. Mark, if you want to run quickly through your disclosure slide, and then we can go from there.
Yeah, thanks so much, guys. And I think we covered just sort of the general suitability and review for your own personal situation. Obviously, these materials are not meant to solicit or distribute any information. We're just here to help, hopefully have a instructive conversation that, generates some ideas and some good dialogue in your own goal setting.
Oh, so who are you?
That's me. My name is Mark Peck with Forge Global. We are the one of the leading players in the private market space. We support the innovator economy and this private market universe that has continued to grow over the past decade, if you will. We do a few different things at Forge, primarily helping make liquidity in private companies. So we're working with a firm like Flywheel, who's generating the asset management thesis and managing the positions as a general partner. We're helping work with them on the back end, to find the best liquidity, to find the price points, and to find the opportunity to both buy and sell. We do that across institutions as well as for individuals. It's the majority of our business today. We support that business, though, with a few other pillars of work that are really focused, again, on this private market economy. And in many ways, we've built our business in the model of a picks and shovel mission and mandate to be one of these other picks and shovels for investors and folks who are trying to drive innovation. For us, it goes back to custody. I think there was a topic on a previous webinar, and it is a critical topic when you're talking about alternatives. It's not always easy to have custody and good, location, control, valuation, things you can report on that are critical for both businesses and individuals to feel comfortable, as well as then data, informing the choices that an asset management group would make, right, around their portfolio requires good data. We are uniquely positioned to provide data like that out to enterprises and, again, interested individuals, if you will. And then really our last pillar goes back to, again, supporting the businesses that make all of this really hum, right? Those 6 names that Rick talked through a little bit before, those companies are doing the innovative work here, and that's where we want to be supportive. In our mind, creating good liquidity, creating good data, creating the good rails of this industry to make things easier for all consumers is about being a good partner with those companies. So the names on the list here, we've had the opportunity and good fortune to work with many of them, and we view it as a company solution or Forge company solution to help make sure we are a good citizen and a good partner with these capital growing and capital issuance on the primary and secondary side firm. So I'll kick it back to you, Colton, but we're excited to be here in support of the Flywheel group and just love the thesis.
Yeah, thank you so much, Mark. And as mentioned, we've worked pretty closely with Mark and his team. They're doing some amazing things. I know I caught the end of the last webinar just talking about investing in crypto through IRAs and things like that. And it's just, it's amazing to see that space grow. So you can see on the screen a few of the names that we've transacted with Forge with some of these. A lot of them are targeting, like Rick said, 50+% of our portfolio targets ABC technologies. And really a bit about Flywheel. We solve a lot of the same problems that Forge does in just providing access to these private companies, really because as Rick mentioned earlier, if you're investing in the larger public companies like Tesla, like IBM, it's not targeted exposure. It's not enough exposure for these companies. So what Flywheel does is really break down the barriers to entry for pre-IPO investing. So we believe that the majority of gains, especially in this space, are made prior to a company going public. We have a question in the field. Yes, Flywheel is open to accredited investors only. It's through a self-accreditation process. If you have more questions about that, feel free to send us an email afterwards. We'll have our contact info. So we allow investors access to these pre-IPO companies. And secondly, even if you did decide to invest in these pre-IPO companies, a lot of the time there's a barrier to entry in terms of a minimum investment size. My own experience with that was trying to invest in Robinhood a few months ago, back in the middle of last year, and really wanted to buy Robinhood, but there was a $100,000 minimum just to buy shares, and the pricing wasn't that great on these shares. So that's when I decided to really build this fund around, I'd love to invest $100,000 in the private market, but I don't want to invest $100,000 into a company that might not be proven yet. So why not get 10 friends together, pull our money, each one invests $100,000. We buy 10 different companies. Everyone gets $10,000 with exposure to 10 different companies. Is basically the thesis. And lastly, a lot of people are missing out. They can't get access to these companies even if they are going public. They can try to get allocation through firms like Morgan Stanley, Fidelity, et cetera. But unless you have tens of millions of dollars with these wirehouses, you're probably not going to be a VIP client, and you're probably not going to get any sort of allocation to these IPOs. So we provide the economies of scale. We break down those cost barriers, and we can really get better pricing when we access these pre-IPO companies through a better price per share or buying at a specific valuation. We provide that diversification, so you're not getting K1s for each and every either private company you're investing in, or if you're investing through an SPV. So it's a little bit more simple from a tax perspective. And then we provide that early access to these companies. A little bit about how we invest and what we target. We really focus on the venture rounds of these companies, and as you can imagine, companies that are targeting AI, blockchain, and crypto are a macro trend of what's happening right now. This is a macro trend, and if you ignore a macro trend, then that's a great way to miss out more than anything. So the type of companies we target, this is an example of Snowflake, who went public back in, I believe, October of last year. You can see on the x-axis there, that's the venture round. So in 2012, they were raising their Series A. Prior to this, they probably raised an angel round and a seed, and they were raising a round about every year after that. And you can see once they get to 2017, 2018, that hockey stick really starts to form. And that's where Flywheel really targets investing. We target after Series E companies, and the reason why is that herd mentality of these VCs. It's really hard to raise your Series A, but after that, after you get that lead investor, it's a lot easier to get more and more money from different venture capital funds as they spot they see the due diligence, they see the opportunity, and they follow on. So we target companies that are post Series E venture round. They have to be $1 billion plus in terms of size, so they're most likely not going anywhere. And then lastly, we look for back-to-back venture rounds. So a company raising in 2021 and 2020, or 2020 and 2019.
I want to point out one thing. Oh, go ahead.
I was just going to say, and you may say the same thing, Rick. I think that there's just a critical element here that informs the decisions, right? The allocations. It's getting price discovery, it's getting valuation, it's getting, momentum story around what's going on with the business. And it is really common in this world to see, a lot of liquidity, both on the bid and the ask side around venture rounds, right? So when there's primary issuance or the announcement of, a going public offering, whether that's IPO or SPAC, you often see a lot of opportunity there, but you've got to be ready and you've got to be nimble. And that's where being informed, on Rick and Colton's side is critical to take advantage of it.
The one point I want to make on this chart, and Mark's absolutely right, Forge is a critical partner in helping us get exposure and gain inference on liquidity and creating market velocity. The further on this chart to the left you go, the more risk there is. Kind of seems like a basic principle. The reason why we picked the point where the circle is because we feel like at this point, the company's been vetted, has been identified as promising. And so from our perspective, the 2 points of risk, one is mispricing on our end, where we misjudge a price. And the second point of risk is outside traumatic news. Think WeWork, some sort of fraud or something that comes out, that we can't predict. And so we like this position, we diversify across 10 positions because there's still, realistically some risk, but we're not a VC, we're not buying into 25 to 50 different companies because we're taking a scattershot approach. It's a focused approach.
Yeah, and with that, with the 10 names, according to portfolio theory, you can achieve perfect diversification with 100 names in a portfolio. You can achieve 96% of that perfect diversification with 30 names in your portfolio, and then you can achieve 90% of that diversification with just 10 names. So we typically target 10 to 12 names in our portfolio, and we feel it's a pretty good hedge against the risk. Great. So yeah, that's most of what we want to cover in terms of the deck that we're going to run through. We have some more slides in there, but it's really contact and whatnot. Really going to open it up to questions here if anybody wants to post one in the Q&A. We also have a few that we can go through. Mark, this might be a good one for you. What impact will government regulation on cryptocurrencies have on the future of blockchain?
Boy, I think that might be the $1 trillion question of the month. And I don't know if I'm the best qualified to speak to it, but happy to take a crack at it. I think what you've seen, just recently out of the infrastructure bill and the language, and again, I don't play a lawyer on TV or pretend to be one, so I don't know how it will shake out. However, I think that it seems pretty clear that an additional level of reporting and the standards around KYC, AML are going to be enforced. And we all here know, as sort of early adopters and appreciators of the business, that firms like Kraken and Coinbase are already doing a lot of that. But it feels like to the outside world, I think outside of blockchain, that maybe there's not sufficient universal coverage. So I think things like just meeting the kind of Bank Secrecy Act and OFAC checks that other folks who are moving money, especially in the United States, that's going to be enforced no matter what. That's going to level the playing field. I don't have a problem with that necessarily. I am a little bit concerned about what you've heard about some of the oversight they want to put around some of the decentralized finance apps. And as a hodler myself, and speaking to my own portfolio, I am a little bit worried about, I think, the way that's evolving. I hope the United States finds this as a chance to champion our innovators. We've got amazing companies doing incredible work, not only domestically, but around the world, but a lot of them based here. I hope this is an opportunity for us to accelerate that growth and get more companies falling into Rick and Colton's hockey stick here around the space. So I think there's going to be a silver lining there, but it's been a little bumpy the past few days for sure.
Thanks, Mark. I was joking with Mark last night. I was going to make him a slide that just said HODL and have him just scream that for 15 minutes, but obviously didn't make it in here. A few more questions rolling in. Thanks everyone. Andrew asked, what are your views on the tokenization of PM investments? Any plans on this? Any plans and plays on this? Rick, that might be a good one for you.
Yeah, and I'm just trying to answer questions here on the chat as well. So, I think that there's a lot of different plays. The particular macro trend that we're talking about right now, is related to AI, blockchain, and crypto. I think we are less interested in following a specific play and more interested in following a specific company and a specific unique opportunity. So I'll give you an example. We're in Eat Just right now. Eat Just is manufacturing plant-based eggs. The macro trend here is, and everybody can see it when you go to the grocery store, the increasing cost of meat. That could flip the paradigm, and artificial meat becomes cheaper and therefore more cost effective. And so I think that there probably could be a macro play directed in that direction that you mentioned, but it's not one we're targeting specifically right now.
Thanks. Brendan asks, thoughts on investing in DeFi crypto assets and yield generators, i.e. companies building layer 2 and 3 infrastructure that may only be investable through these assets?
I can take a crack at it, and I think there's a piece that is applicable for the Flywheel guys here, just to speak about sort of their approach. I think it's been tremendous, the value built there, obviously, and the interest is so high. It feels to me like there's going to be more choices through some of these traditional mechanics that maybe are not just a coin or a token offering. It does, again, back to sort of the murkiness around what we're going to see as the final regulatory framework, if there even is one issued by Congress this year, let's say. I think for me as an investor, let's say, I would say it this way: if I was an investor looking to allocate, yes, I love the direct exposure, and yes, you love the yield opportunity. But much like owning the private stock in BlockFi or Kraken, which they're talking about, here in this model, I think that would give me some comfort to also have the opportunity to hold something that modeled a more traditional equity token or equity ownership stake back to the company itself. I don't know how you necessarily unpackage that. It's probably really specific to your own goals and what you want to achieve. But some balance of the two probably would be my preference from like building a truly diversified portfolio. You could have a combination of both, right? DeFi, where you're managing the coins and the keys yourself, farming yield out there, plus owning shares in Kraken as they march on as one of the largest exchanges, then in that highly regulated manner. So I don't know, Rick, if you have want to toss in more on that one.
Yeah.
Go
for
ahead.
the sake of time, I don't want to run too much over as well, because I believe we're running up on time right now. We can definitely discuss that later on as well. So we can dig in there if you want to fill out the contact form on our website. That works well. We had a few questions around terms of investment, fee schedule, and how do we value these private companies as we hold them. So we run a typical private equity or hedge funds model. It's 2 and 20. We do have A, B, and C share classes, so you can get that fee down to as little as 2 and 10. 2% of assets under management and 10% carry. We only revalue private investments if they raise a venture round. We don't revalue them on secondary transactions. I tried to really build the fund as beneficial to LPs as possible. I built it in the way that if I were an LP, I would want that. Our carry, we return capital as we exit these positions, and we exit them as soon as our lockup expires. Something that sets us apart is that we hedge post IPO. We typically hedge using a zero cost collar strategy. If you're interested in talking about that, we can definitely run you through. But we want to, the reason we hedge with that strategy is we feel that most of the money is made prior to going public. And then we researched every IPO back to the year 2000. And companies typically, on average, in the 12 months following IPO, a company will increase in value by 20%. 19% of that is all made on day one with that IPO pop. So they really pop on day one and then trade flat for the remainder of the year. I think we're at time. Mike, Kevin, if you want to jump in, we can continue to answer questions, but I don't want to be disrespectful to the next presenter as well.
Yeah, for sure. Thank you so much, you guys, for sharing your expertise in this space to our community and sharing how individual investors can access private market PBC opportunities through Flywheel Capital. So all the unanswered questions will be forwarded to their team, and they'll make sure to follow up with you on them. If you would like to follow up with them yourself, please fill out their contact form at flywheelcapitalmanagement.com.